Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about Cardano and whether or not the upcoming Vasil hard fork might be a turning point. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. We put a lot of updates about our indicators and more over there. So with ADA, anyone who's been following the market, certainly anyone who is invested in ADA, has been feeling a lot of pain recently. ADA is down, currently about 85% from its all-time high back in September of 21. And really ever since that all-time high, which coincided with the Alonzo hard fork, where smart contract functionality was added to the network, it's pretty much just been down only, right? ADA really didn't participate all that much in the rally we saw a lot of other altcoins experience in November, and certainly, Bitcoin and Ethereum rallied during that month. ADA was really just kind of down only ever since then, and except for kind of one relief rally we saw back in March of this year, yeah, for the most part, it's been down only, or at best, kind of sideways chop. Now, we have been able to kind of establish this range at around 46 cents or so as some support more recently. And one of the things that was interesting about ADA is it didn't actually dump along with a lot of the rest of the market when we had all of the sell-off going on, when, the Celsius debacle, the Three Arrows Capital situation back in June. It didn't dump nearly as hard as some of those other ones, which was something that was interesting. But still, what it's been doing is been able to hold some support here. But again, not really any appreciable rallies to the upside ever since, September of 21. So what a lot of people are looking for then with ADA is, what are some catalysts that could move it back to the upside, right? What are some things that could push it back up? And one of the things that people have been talking about, and I think some people have been, trying to say or would like to believe could lead to some upside, is the Vasil hard fork that is on the immediate horizon. And this hard fork is basically, in a nutshell, trying to improve the throughput of the network and especially improve the smart contract functionality and throughput. And so certainly that would be good for the network, right? Higher throughput's always going to be good for a layer 1 network. And then also having better throughput of smart contracts, which was one of the issues with Cardano, that with the Alonzo hard fork, there were a lot of issues that arose with implementing the smart contracts. Things did not go nearly as smoothly as people would have liked. And that might be part of why we saw price just kind of continue to the downside, because after the hype of that of smart contract functionality being released, because there were all those issues, there wasn't really a catalyst that could come off of that to push price even higher. And so really, I think the hope with this hard fork is it'll let Cardano get closer to that goal of starting to really realize a large and thriving ecosystem and have decentralized applications on it that are using smart contracts and things like that. And there have been some signs that, maybe different players have been seeing this as a bullish development or have been wanting to accumulate in this range. So this is an article here by Cointelegraph. They're just talking about how some of the larger wallets on the Cardano network have been accumulating more recently, leading into this hard fork. Now, it's hard to know if they're accumulating for some kind of long-term rally, or if this is just accumulation to kind of build up a position down here before there might be some kind of mini hype rally that they could then dump on at the top of. We really don't know. But at least it's a sign that there might be some interest coming in based on this. But what I want to talk about more today is, okay, so let's imagine that this hard fork is a bullish catalyst that could lead to some upside. What are some things we should watch to think about whether or not this might be possibly a more sustained rally, or if it's just going to be a limited pump and then dump, especially in this bear market context? So I want to talk about a few of our indicators here at the channel, give us a way of just kind of looking at hard data and then saying what kind of data-based outcomes we want to see to kind of get more excited about any kind of rally that might materialize going into or coming out of this network upgrade. All right, so the first indicator I want to talk about is the momentum bias indicator, or MBI. So if you're not familiar with this indicator, basically 0 is the average momentum that's been in an asset. So for ADA, that's positive because ADA has trended up over time. And then the 1 and -1 are standard deviations. So this is a z-score, so 1 standard deviation above and below the mean. And what this is really capturing is the prevailing momentum in an asset. So is the momentum kind of biased to the upside, where moves to the downside are just quickly reversed and then pushed back up, or is the prevailing momentum to the downside, like what we're seeing here, where it really just kind of drags price down with it, and any attempts to reestablish a positive momentum bias oftentimes just get rejected back to the downside. And so what we can see right now, as I was just mentioning, is very much bear market behavior for ADA, and that's not surprising by anyone. You know, you can't fall off 85% from the all-time high and, you know, claim that you're not in a bear market. I think this is not news to anyone that we're in a bear market right now. The big question is what we have to see to believe that we might be exiting that bear market. And quite simply, from the perspective of the momentum bias indicator, what we'd like to see is a reestablishment of positive momentum bias, or at the very least, being able to kind of oscillate around zero, because that's what tends to happen with assets in kind of early stages of bull runs. We see this with assets like Bitcoin, Ethereum, etc. You'll see this oscillation around zero as you're kind of transitioning between a bear market and a bull market, and then you might hit this patch where you're just in positive territory for a very extended period of time, which is those big parabolic rally phases of a bull market. And so what we're seeing right now is very characteristic of bearish behavior, where you'll pop your head above zero, but then you'll quickly get rejected back to the downside. And this is what a behavior we see at the NBI across, you know, Bitcoin, as I said, a bunch of different assets. When you're in a bear market, a lot of red, poke your head up above zero, get rejected back to the downside. That's exactly what we saw here, you know, coming off the all-time high, just down only with only a brief relief rally, trying to reestablish positive momentum, but then the market took us down with it, and we've been going down ever since. So what we would really like to see from this model's perspective is get above zero, first of all. That's the first step, right? Before maybe getting more excited about this possibly being a reestablishment of a bull market. And then spend some time up there, right? You know, spend some amount of time up in the green before maybe dipping back in the red. And when we do dip in the red, we like to see a reversal before too long back up into the green, kind of this equal oscillation. We start seeing that behavior where if the ADA price either kind of glides sideways or starts maybe trending up a little bit, and we start seeing that kind of behavior of the NBI, that can be an indication that a bull market might be in the creation. But until we see that, you know, we're still very much in bear market territory from this model's perspective. So right now, it's not saying that there's anything in the price action yet to suggest that we're exiting the bear market. So something to watch. So the first step, again, get above zero, and then try to oscillate around zero before maybe eventually then catapulting off to the upside. So basically, leading into the Vasil hard fork, we haven't seen price action yet that'd be diagnostic of a potential reversal out of the bear market. But we'll have to watch it and see how price reacts as we get closer to the actual launch of the network upgrade, see if price ends up reacting to that. So let's talk about another indicator that's useful for looking at trend reversals, and this is the market direction classifier, or MDC. If you're not familiar with this indicator, essentially what it does is it evaluates the asset's price action, so in this case ADA, and then it creates a critical level that it's watching, that above which if the price can get above that critical level, that's bullish. If the price falls below that critical level, that's bearish. And you can see this does a pretty good job of identifying these kind of uptrends, and especially these bigger uptrends that ADA has seen, as well as identifying this big downtrend that we've now entered into coming off of the all-time high. You know, certainly anyone who sold up here would have saved themselves from a world of pain as we've fallen all the way down. And so from this model's perspective, you know, we don't really get too excited until we flip above this critical level, right? We'd like to see us flip above. So we're not obscenely far away, but we're certainly not there yet, right? We still have some room that we'd have to move back to the upside before we get too terribly excited. So from this model's perspective, you know, we're not there yet. And so that's what we'll have to watch and see. If we can flip above this critical level. Now, this is a dynamic level, so this will be changing over time. But if we are able to flip above the MDC critical level, that would then be a bullish sign that might suggest that a relief is along the way. And especially if we get confluence between the MDC and, or excuse me, the NBI and the MDC, that could be even more information that maybe bullish price action is more plausible going from there. Now, the final model I want to talk about, this is less about trend reversal and just looking more at risk in the assets. This is the upside downside potential indicator. It's our risk model here, showing you the price action of ADA across time color coded to the risk level. Showing you the medium term here. This is reactive to moves that play out over weeks to months. We also have versions that are more short term, which is more about days to weeks, and the long term that's more months in its scope. But I'm just showing you kind of this middle one here. And so, you can see this does a good job of identifying these kind of hot zones, these high-risk zones, and these low-risk zones. And we've, of course, probably unsurprisingly, we've started to chop down lower and lower as we've been falling further and further from the all-time high. And if I show you just the raw output, you can see that we're currently sitting a little bit above -2, so about, negative 1.6 or so on the medium-term UDPI. Now, one of the things that's notable about ADA is that this actually has not fallen down as far as a lot of other assets. A lot of other assets are down in these deep, low risk levels. ADA's not there yet. And you can interpret this in two ways, right? One way of interpreting this is that just means that there's more risk that's possible, or more downside that's plausible from the model's perspective, suggesting that it's not totally convinced ADA can hold the 46 cent range as support. There might be more downside that would have to happen before we might find a bottom. The other way you could interpret it, though, is that, really what this is getting at, what this model is getting at, is the plausible upside versus the plausible downside potential. The other ways that you can read this is that ADA has just been holding up better than other assets in this bear market, right? That it's not realized as much of its realistic downside potential as it could. And so that might be a sign of relative strength. But again, it doesn't mean that this downside doesn't exist. It's just that it hasn't gone there, whereas a lot of other assets have already gone there in this current bear market. So it's something to watch. But certainly, if we were to see a rally from here, there's plenty of room to the upside that could be realized, before we might hit some resistance. If generally speaking, this kind of 4 level is often acted as 4 to 5 as kind of those tops of these rallies. There's certainly tons of room from there. I would personally argue, though, that in a bear market context, it's probably unlikely that we could rally that far, especially if the broader market isn't rallying. If it's really ADA going on its own based on something like the hard fork happening, I would actually suspect that once we even just get into the positive territory at all, I'd start to be getting quite skeptical of continuation of that rally. We might find some resistance there. Obviously anything that could happen, but really, said this once, say it a million times, with any altcoin, I personally don't believe that any altcoin is going to be able to go on some crazy rally while the rest of the market remains bearish. And so really, for me to see these risk levels as being a plausible target in any kind of rally, I'd also want to see Bitcoin going berserk. I'd want to see Ethereum going berserk. And frankly, I'd like to see the macro markets going berserk. I'd like to see a rally in the stock market, etc. If it's just ADA going on its own, I don't think it's very likely we get back up here. Anything's possible in crypto, but I would be shocked if in a bearish context ADA were able to get all the way back up there. So what are my overall kind of takeaways then when we're considering how much of a bullish catalyst this hard fork could be? Well, certainly I think it could be a bullish catalyst, but what I do question is how much of a bullish catalyst it can be in this very much bearish, more broader context. And, really when we just look at some of these indicators, I think ADA has some things to prove before we might even get that excited. And even if we do, let's say we do go on a rally back up here, my base case right now, and I know that some people won't like to hear this, but my base case right now is we might just see a replay of what happened back in March, right? We might go up, reclaim a positive momentum bias, and just get rejected back to the downside. And, should we come up here, we might just get rejected off of the MDC critical level. It's been more or less acting as resistance coming out through here. We might just see another kind of blip like that happen, not really be able to reestablish bullish action. It might be good for a swing trade, a very short-term swing trade, like here to here, for example. But again, my base case is not that we're going to go on some parabolic rally. And I know that people aren't going to like to hear that probably, but it's just the nature of altcoins, right? That when we're in a bearish macro condition, it's very unlikely for any altcoin to just defy gravity and just go on some crazy rally. Now, that all being said, if we see a change in the macro environment, so let's say the Vasil hard fork hits, ADA starts ripping, but then we actually see also Bitcoin start to move up, Ethereum start to move up, especially, the broader macro markets start to move up, then I'd have a very different take. I wouldn't be expecting kind of just a shorter term blip like we've seen in some of these past times for ADA across the MDC or one of these. Then I might actually expect us to see this big explosion actually reestablish some positive momentum bias that can really push price up further, maybe actually realize some of this upside potential that's here. So really for me, what I'm mostly going to be watching for is as these indicators might signal some bullishness, then go and look at the macro environment. If the macro environment's bullish, then I would have higher upside targets that I would set. If the macro environment stays bearish, I'd be setting lower upside targets. So none of that's financial advice. You should make your own opinions based on the data, but that's just the way that I'm looking at it right now. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter for a lot of updates, better indicators, and more over there.